Anil Jain, MD at Jain Irrigation, at the show with us. Anil, your international business will be getting merged with Temasek-backed Rivulis. Walk us through the key details of this merger and what synergies are there for the Indian parent company.
So, I think this merger is one of the unique events and marquee events as far as the international irrigation market is covered. Rivulis, which is owned by Temasek, became Rivulis through acquisition of various companies and is about a $400 million size entity operating around the world. Our own international irrigation business, operating as a partly headquartered in Israel, partly in USA, is also $360 million size of revenue business, also operating in more than 100 countries in the world. Now, both of these companies are getting together and getting merged. And through this merger, our international irrigation business will be able to get a significant value creation opportunity where we can pay off the entire our overseas debt, which is in the operating companies, as well as the bonds which we have. And through that, the parent company, Jain Irrigation, would be able to reduce its debt by almost close to 2,700 crore rupees. So that's a one significant benefit for the parent. But apart from that, in this merged company, we as a Jain Irrigation India, through our subsidiary, overseas subsidiary, will continue to own 22% of that merged co. So our own business was 350. This is a additional 400. So of this 750 million, much larger, more than double our existing size company, will continue to own 22% stake, which is, again, if you look at our existing business, it's more than doubling, of that size. And that would allow us to continue to create value in the future through this equity, because, this company will continue to grow. Now, when you look at, that's the transaction mechanics and the numbers, but also what is critical is that both of these companies together would be one of the leading players in the world to provide climate-related solutions, because we basically provide crop solutions to the farmer, which will help them save the water, help them improve the productivity. And whether the farm is 1 acre size or 100,000 acre size, doesn't matter. We have technologies and a product, horizontal product base, which can cover all types of the farmer. So those are, I think, are significant benefits of this transaction.
Now, consolidated debt is expected to fall by 46% to 3,300 crore. How will the entity service the remaining debt, and how much free cash flow would you envision to generate? Any internal target for net debt also?
So I think, again, first, quickly to remainder part of the overseas business, as you know, we will continue to export to the merged co, so that would continue to add value to the JSL standalone India balance sheet because of continued exports, and that is always profitable. Apart from that, the remainder of debt now, which is close to about 3,300 crores and odd, which would be on the standalone India balance sheet, comprises of two levels. One is our main business in India of the drip irrigation, piping and tissue culture, and also our global food business, which is in India and outside India. So that debt, I think food, if we keep aside for a moment, because it has its own momentum, and through value monetization process, that debt will come down for next couple of years. The main company, the Jain Irrigation standalone in India, where we have drip irrigation piping business, we see enormous growth opportunity there. Now, through that growth and through internal accruals, the remainder of debt will get serviced from Indian cash flows. And as one would have seen it for March 22 results also for the entire year, we had almost 700 crore rupees of overall, cash flow generation, post-working capital changes from the operation. So that was already big positive. And through change in our business model, selling directly to the farmers, ensuring that we finish off all the government projects and do not, because that gets always long delayed receivables, which we do not want to focus on. Focus on direct sale to the farmer via our dealer base, increase our dealer base in northern and eastern parts of India. We are already quite strong in western and southern parts of India. I think that's what we are looking for. And that way, we believe very comfortably in a very sustainable way, the India standalone entity can service the remainder of debt.
So is this a 2.0 or turnaround moment for Jain Irrigation then? And where is it that you see the company, let's say, in the next 2 to 5 years?
Yeah, so I think that's a good question. If you look at One was in March, on 25th March 2022, when we signed off the restructuring resolution plan with all the lenders in India and the overseas lenders we had. I think that was a big moment where we know that all of them see good future with this company. So we did that on 25th March. And on that day, I think we paid kind of total 700 crore rupees. Also in terms of, repaying some of the long-term debt, repaying, covering the interest and so on. So the company's now account is standard and current in a sense, but because of RBI rule, it will become standard only 12 months from the date of implementation. So that is moving now quite smoothly. That was the first phase to get restructured with India lenders and set the Indian business on a growth path and a profitable path. And as you would have seen, the March 22 results were already profitable. Now, this is number 2 event, which is taking place in the June quarter, where we have reorganized, let's say, overseas business. We have merged with a much larger company, and we have got a good amount of cash to pay off a large amount of debt. So that's the second thing which has been done. Now, when you think of the future over next 2 to 5 years, 3 things I would say. One, the India debt would continuously further go down. The sustainable debt, the long-term debt, all I think through our internal accruals and whatever further value monetization we can do, it would get, substantially it will come down. And we might retain some amount of debt which is required for the working capital for inventory and receivables. But even India debt will significantly come down over next 2 to 3 years. That's our target before 2025.
Thank you so much for joining in on board, Mr. Jain, giving us a view as to what the synergies will mean for the company.